Hey, you guys, this is Dee Edwards. I am your favorite taxpreneur and the senior tax professional of Accurate Tax Services, and I come to bring you the facts. Now, I know whether you guys are coming to Accurate Tax or going to another tax service that you guys have been seeing the signs everywhere about needing a loan, getting advancement up to $6,000. So I want to educate you and help you to make an informed decision. So I'm going to put my hand on my notes and say, I swear to tell the truth, the whole truth, and nothing but the truth. So help me God. All right. So thank you guys so much for catching me live. And also thank you for all of our replay viewers. Don't forget to share this video out. You can go to bookaccuratenow.com to book your appointment with Accurate Tax Team. We're so excited about seeing you January the 2nd. So before you walk through the doors of Accurate Tax Services, I want to make sure that you are fully aware of the loan process and how it works. What I'm about to share with you is information that works at just about any tax office that you go to. The only difference is that some of us use different banks. That means that you don't have to pay your tax preparation fee out of pocket. And so we have to have a third-party bank who allows that to happen. So there are several banks that's available and out there, but we use Refund Advantage. So this information is brought to you from Refund Advantage and the tax professionals of Accurate Tax Services. So let's go. All right, so the first thing that you need to know is that there are two different types of loans. There's your in-season loans and your pre-season loans. What does that mean to you as the taxpayer? Pre-season means that there are loans that's available before the IRS opens. So the pre-season loans will be available January 2nd until hub testing, which is normally around the middle of January, towards the end, somewhere between January 15th and January 20th. Okay, so the pre-season loans will be available January 2nd until about January 20th. The in-season loans start after the preseason loans. So the in-season loans will start around January 20th, and then it will go until the middle of February, or when the IRS releases basically their first main refunds, which normally includes the earned income tax credit. So that normally happens around February the 20th. Okay, so I want to educate you and make sure that you're fully aware of the different types of loans. There are two loans: pre-season loans, and then there are your in-season loans. Okay, so first of all, regardless of the type of loan that you choose, wherever you get your loan from, whether you are approved or not, it's the place where you have to file your taxes. Okay, it is the place where you have to file your taxes. You can't say that I'm going to go to so-and-so tax service and then you want Accurate Tax Services to file your taxes. You can't go to so-and-so tax service and get your loan and then want to come to us to file your taxes. You have to go to the place where you got approved for the loan or denied from the loan. Okay. All right. So that's something that you guys need to know. Let me put on my spectacles. The next thing that you need to know is that the loans are based upon the amount of your refund. In previous years, you can select whether or not you want to apply for like a $500 loan, a $1,500 loan, or a $2,000 loan. This year, it is based upon the amount of your refund. And there are three tiers to the amount of the loan: 25% of your refund, 50% of your refund, or 75% of your refund. Okay, you get to select which percentage that you want to apply for. Okay, so let's say hypothetically, let me get my calculator out. Let's say hypothetically you want to apply for the 25% loan of your refund, and we are going to say that your refund is, let's say if your refund is $8,000, yes, okay? So $8,000, 25% of that is $2,000, okay? So if you were to apply for a $2,000 loan, let's talk about how much you would have to pay back. And also, I'm going to share with you guys some information on the backside from the tax business owners so that you guys can understand as well. So I'm just going to spill the tea. I'm going to let you know. Now, there are some tax clients and some tax business owners, you know, they feel like there's no fees that are associated with our clients applying for the loans. There are fees associated, okay? So thank you guys so much for sharing this out. There are fees associated with you applying for the loan and getting approved for the loan, okay? So let's say if you apply for the loan and the loan does not go through, then the tax business owner is not charged a fee for that. But let's say that you apply for the loan and you get approved for the loan, then the tax business owner is charged a fee. So you may be saying, well, how much is that fee? That fee is $79. So we are charged $79, okay? We can be charged, that's for direct deposits and for checks. If you apply for a prepaid card that is issued from the tax company, not the one that you bring from Walmart or NetSpend, not of that. You got to get the prepaid card from the tax business owner, then their fee is $20 less. So that makes our fee about $59. So most tax business owners will encourage you to select the prepaid card because it's less fees for us as the tax business owners, okay? So let's talk about how much your fees will be. So let's say if you are a tax client and you say, hey, I want to apply for a loan up to $6,000. First of all, let's make sure you're absolutely clear that you cannot just walk through the doors and say, hey, give me $6,000. Remember that the refund is based upon the amount, the loan is based upon the amount of your refund, okay? So let's do some calculation here. If you apply for a loan that is 25% of your refund, so let's go back to the $8,000. Your refund is $8,000. You want to apply for a loan, 25% of $8,000 is $2,000. There is no fee associated with that. So you can get to $2,000 and there is no fee associated with that whatsoever. But if you want to receive 50% or 75% of your refund, there is a fee associated to you. Now, if you are a tax business owner, keep in mind that the fee is still associated with you, even if they select 25% of their refund. So just keep that in mind. You're still charged a fee, but the client is not charged a fee, okay? So let's say if you want to apply for a loan that's 50% or 75% of your refund, this is how it's going to work. So let's do 50% of 8,000. We know 50% of 8,000 is how much, class? It is $4,000, okay? So $4,000. That's 50% of the refund. So the interest rate that is associated with that amount is 36% APR. Now, I know some of you guys may be saying, what in the world is 36% APR? Because that was my question as well, okay? So you would take the amount of the loan, which is $4,000. You would divide that by 365 days. So you're dividing it by 1 year. The APR amount for the loan will be 10.96 cents a day. So $10.96 a day will be the amount that you will have to pay back or will be taken out of your refund. So let's do the calculation. So for simple math, I am going to round that $10.96 up to $11. So if you apply for the pre-6 season loan before the IRS open and you qualify for earned income tax credit, well, you already know that your refund will not be released. The earliest that it will be released is February the 15th. So if you go to a tax office on January the 2nd, okay, so let's do some math here. If you go on there January the 2nd, from January the 2nd to February the 2nd, how many days is that, class? That is 30 days. And so we're going to do this calculation based upon February the 15th, okay? All right, so let's go. So that's 30 days, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43. Okay, that's 43 days. So the amount that you would pay back is 43 days times the $11 is $473. That is a lot of money. However, based upon your circumstance, based upon your situation, you may say, hey, I'm going to pay them that, I'll round it up, $500 back for the $2,000 loan, and I mean for the $4,000 loan, and I'm good with that. So you just need to understand how the 36% APR it works. So I hope that helps you. Nakia said preseason loan is before the IRS open. That's right. Taxpayers not charged the fee for 25%, but the tax office is still charged the fee. Yes, they're still charged the fee. The main fee is $79, but encourage your clients to get it on a prepaid card that comes from you, and that amount reduces by $20 to $59. So that's what I'm going to encourage, you know, our clients to do. There are fees associated with you applying for the loan and being approved for the loan. Right. So if they apply for the loan and they don't get the loan, then there's no fee that's associated with it. If they get approved for the loan, then the APR starts that day. Okay, so that's how the interest rate is calculated. All right. So let's take this same scenario that you want to get your refund is $8,000, but you want 75% of your refund. You want to just apply for 75%. You were like, listen, I'm just going to go ahead and get as much as I can. All right. So 75% class of $8,000. How much is that? Okay. Now, for those of you all who may not be so good in math, let me show you how that works. Okay. So you put $8,000 on your calculator and you multiply that, hit the multiplication sign, put in 75, and then you can hit the percentage sign, and that'll give you $6,000. Or if you have a bootleg phone, you'll take $8,000 times 0.75, and that still give you $6,000. So either way. All right. So we're going to say that this client is applying for 75% of their $8,000 refund, right? So that equals $6,000. We are going to divide $6,000 by 365 days. That means that their interest rate is $16.44 a day. So we're just going to round that up to $17 to make these numbers easy. So $17 times, how much was their refund? I forgot. Wait, yeah, I'm sorry. Was it what I said? 8,000. Hold on. Let me check my notes. Wait. Let me go back to it. Oh, okay. Here it is. All right. So I'm at $6,000 divided by 365, and so it is $16.43. We're going to round it up to just $17. And remember that if you do the preseason loan, that is $17 per day from the day that you got the loan. So January 2nd to February the 15th is about 43 days. Okay, so you'll take the $17 and you'll multiply that by 43 days. That equals $731. Oh my God, these banks are making a killing. Oh, they are making a killing. $43. Excuse me, $731. These banks are making $731 because you want to borrow $6,000. So you just have to decide, you know where your situation is, you know what you're going through, you know whether or not you want to pay this amount back. So the amount that you pay back, $731, keep in mind, this does not include the tax preparation fee. This does not include any of the bank fee, software fee. If you have a service bureau fee, that doesn't include any of that, okay? So just keep that in mind as you are applying for the loans, okay? Let's see if you guys have any questions. Nikita said, encourage your customers to get the prepaid cards that are affiliated with the company that's offering the bank products. Absolutely. All right. So Johnny says, is that fee separate from their filing and preparation fee? Yes, that's a very good question. Yes, it is. It's definitely a separate fee. This is just what the bank is charging. Your tax office or the tax office that you decide to do business with, they do not they're not responsible for denial or approval of a loan. Okay, so let's get that clear. We cannot say, hey, I want to approve D. Edwards for this loan, or hey, I want to approve Nakia from this loan. We don't have anything to do with that. That basically comes from the bank. Now, some of you guys may be saying, well, what is it based upon? They don't give us a list of stuff that is based upon. What we do keep track of is kind of the trends that we have noticed in previous years. Some of the trends that we have noticed is that if you owe like a state or federal agency, we saw a lot of denials. We've actually had a client to be denied in previous years because they owed the state of Alabama. But also I've seen where someone owed the state and they still got it. If you owe like back child support, things like that, please know that that may affect your approval of the loan. Okay, but it's not predicated upon the tax business office, is not predicated upon your tax professional. It's actually predicated upon you and whatever that the banks are looking at. Now, some of you guys may say, hey, is it based upon credit? Now, they have not used credit in previous years to determine whether or not that you are approved for the loans. Okay. All right. What else? What other questions that you guys have? All right. Let's see. So I told you guys, once the application has been submitted, you can't, oh, I need to cover this. You cannot make any changes. So I just had a client to give me a call and she said, okay, D, I want to apply for the loans, but I won't have all of my W-2s by January the 2nd. You need to have all of your income information in order to apply for the loans, because applying for the loans is basically saying that I am completing my tax return. So if you don't have all of your W-2s, then you definitely cannot apply for the preseason loans. Now, the in-season loans will still be available for you, but the preseason. So you may be saying, well, why are they offering the preseason if they know that most tax clients are not going to have all of their, and they're not going to have all of their income information. The preseason loans are good for self-employed individuals and household workers. Like if you get paid cash wages, okay, or self-employed. That's where the preseason loans work best for. But if you worked a job and you're waiting on W-2s, then you would apply for in-season. Now, the in-season may be better for more taxpayers because the interest rate that you pay will not be as high. Because keep in mind that if you do the preseason loans, then they start calculating the APR the day before the tax season even opens, January the 2nd. So that means that you're going to pay more for the preseason loan than you are for the in-season loan. Okay, so keep that in mind as well. Let's make sure I covered everything with you. Okay, let's see. Okay. All right, so I covered everything with you guys concerning the loans. I hope that this was very beneficial to you all. And of course, I definitely want to encourage you to choose Accurate Tax Services because we work for you and not the IRS. Visit our website at www.accuratetaxservices.net where you can book your appointment, or you can go and book your appointment today at bookaccuratenow.com. Until we meet again, we hit the bull's eye every time. Have a fantastic day. Toodles for now. Bye. Toodles.